My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends, just trying to make a little money. My job is not just entertain, but to put it all in context. So call me 1-800-743-CNBC. Tweet me, Jim Cramer. It's hard to believe, but this market's now been up for 6 straight weeks. That's right, despite interest rates running higher since mid-September, despite being on the verge of an election where both candidates want to pile on trillions of dollars of debt to an already unfathomable amount of borrowing.
The House of Pain.
This market seems like it can't help itself from going higher. So on a sedate day where the Dow advanced 37 points, S&P gained 0.40%, NASDAQ climbed 0.63%, we have to recognize what's causing this era of bullish feelings, namely the Federal Reserve. Because ever since it's cut rates on September 18th, this market's done almost nothing but go up. Of course, it's not just the Fed. This earnings season, we've been blessed by some amazing quarters already. Just today, we had Netflix, amazing blowout, Intuitive Surgical last night. Both, they roared. That's on top of some stellar numbers from the banks to kick off earnings season.
All aboard!
So, can the rally continue for a 7th straight week? I think we have to go to our game plan to find out. Next Monday, we get results from SAP. This is the German software giant, and Nucor, America's largest steel company. SAP has been delivering stellar results as it advises companies on tech strategies, including cloud enterprise resource planning and adopting artificial intelligence. They're very good. They have a lot of ideas for you, but a lot of companies love to sign up with them. Nucor stuff, though. See, while steel pricing is weak, the old hedge fund playbook says you should buy steel makers like Nucor after the first rate cut because that's when their stocks typically start to turn ahead of pricing of steel. Could be an interesting level to get long here. Tuesday is one of the trickier days to navigate. In the morning, we have General Motors, one of the cheapest stocks in the entire S&P 500. The traders believe GM's future earnings will collapse, or it would not have such a low-priced earnings multiple, PE multiple. I think it's a bargain, even as it may be hurt by tariffs on Mexican-made cars if Donald Trump wins in November. Tuesday's also a real big aerospace morning with numbers from RTX and GE Aerospace. Now, both stocks have been flying high. I bet that continues after the report, and most likely they will raise estimates. These are two fantastic, well-run companies. Now, one of my Travel Trust favorite companies is Danaher. It's an amazing life sciences conglomerate that I think might be ready to return to its old greatness. The stock's been doing nothing for ages. But then again, Danaher can't outrun its clients, and its clients are new young biotechs with deep pockets. Unfortunately, that's a scarce commodity in this environment. Still, there are enough young biotechs, and of course just older healthcare companies, that are out there that I bet Danaher can tell a story of an expanding client base and growing orders. It's a very important position. We covered it this week when we did our monthly meeting. I'm obviously on tenterhooks about it. I am concerned because it has not done well. Next up, there was some back and forth on Procter & Gamble, but all in all, people are okay with today's earnings report. Well, they like Kimberly-Clark more. These two mortal enemies butt heads constantly all over the globe, but Kimberly-Clark's been in reorg mode, and it's working. Now, we have so many winners reporting, but there's one laggard that I figure could break out here, Norfolk Southern. It's got a new CEO, Mark George, who I think will bring some financial discipline to this great railroad. Norfolk Southern could put up some excellent numbers. Previous CEO should get some credit for that, by the way. After the close, we hear from Texas Instruments. We've been hearing a lot about how semiconductor companies are in the doldrums, the ones without AI, that is. Texas Instruments falls into that category. But this company's become much more focused. I like it ahead of the quarter, even though it has a little more cyclicality than most chip makers. I like it because interest rates are coming down. Here's a shocker. No matter how poorly Boeing is run, and it's become the benchmark for bad management, the big institutions are possibly Pavlovian about buying the stock. They can't get enough of it. Boeing has to hope that the buyers can maintain their appetite through an already miserable pre-announced quarter because it needs to sell about $25 billion in stock to fix its balance sheet. And I'm betting that deal could come very, very quickly. Maybe even the day the company reports. If you really want to own Boeing, save your powder until after the secondary offering, as it'll most likely come at a nice discount. The flip side of Boeing, sometimes companies can practically print money simply because they're so well run. Take Coca-Cola. Under the steady hand of James Quincy, Coca-Cola has become a low-risk juggernaut with a solid dividend. Definitely a stock that is worth owning. Data centers remain one of the hottest themes in the market. And if you're looking for a pure play, go with Vertiv, which makes electrical equipment for these warehouses full of servers. Now, that said, this stock is so red hot that it might not be able to rally on earnings unless it raises its forecast to unfathomable levels. Then again, Virtu's business is so strong, it's so strong that unfathomable might be fathomable. After the close Wednesday, it's Mega MAGA Man Musk and the Tesla show. People didn't like his recent self-driving presentation, so I think he's going to try hard and deliver a really good set of Tesla numbers because they have been lowered and lowered and lowered, so you can beat them. That's when Elon Musk does his best work. IBM also reports after the close, and I bet we'll get another beat-and-raise quarter. Why? Because it's become a beat-and-raise machine under CEO Arvind Krishna. Enough said. Earlier this week, a semiconductor capital equipment company called ASML rocked everybody's world by giving out a ridiculously poor forecast. Is every company in the industry of capital semiconductor equipment similarly damned? We're going to find out when Lam Research reports. Now, Lam Research is a much better company than ASML. I think it'll tell a good story. I think it's got a healthy buyback. Very risky, though, if it's just only because expectations have been lowered here, it might work. But the problem with Lam is that what happens if ASML is at all right? Then Lam won't pop. But that's not that big a risk. One serial beaten raiser is T-Mobile, and they reported to the close. Can he keep up the winning streak? T-Mobile's had such an amazing run that I'd be a tad circumspect here. Maybe by half and by before the quarter reports and then half after. Thursday's jam-packed. For starters, I'm going to be with Chevron in the Gulf of Mexico. Can't wait. But what about earnings? Southwest Air is looking at a long and hard proxy fight because it hasn't been willing to give in to the demands of Elliott Management, a very, very smart hedge fund. I think Southwest would have an easier time fending off the activists to report a good quarter like what we just got from United. Honeywell recently announced a major reorganization, but can it match that with some good earnings numbers? You know, that last quarter was just okay. In the interim, we got the reorg, and the stock is soared. We own this one for the Charitable Trust, and we're telling members of the club to stand pat. Could this be the quarter that gets UPS out of its funk? It's possible. And that almost 5% yield might cushion the blow if something goes wrong. There was a time when people seemed to ignore the success of David Gitlin at Carrier. Not anymore. You can't. The stock's getting its due. It's now had such a big run that this climate control player may not pop on the earnings numbers, but I sure think they're going to be strong. We keep wondering how Hogue is doing and whether it's still taking share from Nike. Hogue is a division of Deckers Outdoor, which reports after the close on Thursday. I anticipate a strong number for their insurgent running shoe division. More Clockwork love. Texas Roadhouse. Everybody seems to love this favorite restaurant change. Got $11 dinner everybody's raving about. Put it up there with Brinker and Wingstop as winner chicken dinner. Finally on Friday, we got Colgate-Palmolive. And here's one where I stand. It doesn't matter where I stand. Now, I say this. The street, it's kind of an unnatural thing, frankly. The street loves Colgate-Palmolive. I think that the love is way overdone. But that does not matter. Colgate always wins. Kind of drives me crazy. I just want to find out what people really think that they love it so much, but it doesn't matter. It's inscrutable. Bottom line. Can we have a seventh up week? I say why not? Let's take questions. Let's go to Bruce in Texas. Bruce.
Jim, I can't believe I'm on the phone with you.
I can't believe I'm on the phone with Bruce. How about that? Bruce is on the phone. Okay, go. Let's go, Bruce.
I watch you every night and enjoy your show. I've built my Mad Money account into quite a interesting and vital piece of my total portfolio.
I love that. By the way, can I just tell you, Bruce, I'm going to Texas to see the Eagles play the Cowboys, but I'm going to Houston and Dallas because I love Texas. I take a couple trips down there a year, and it's one of my favorite places to go.
Yeah. I live out here in the swamp west of or east of Houston, and we love it.
Oh, yeah, you're in Nacogdoches? I've been in Nacogdoches. I've been to a lot of the towns there.
I'm in Liberty. I know
Liberty. I've been to Texas like 100 times. I love Texas. So go ahead.
Anyway, hey, I'm not calling about a specific stock. I'm just, I want to, your interview with U.S. Steel Chairman David Burr got me thinking, and I'd like your opinion on why Donald Trump and Biden-Harris are both against the merger of Nippon with U.S. Steel.
Well, I tell you the reason why. Because there's an election. Because there's no doubt about it. I am telling you right now. If Nippon Steel buys them, there'll be more jobs created than if not. But that said, I also believe that Cliffs could do a great job. Cleveland Cliffs. I just think that this is political time. No one ever. Look, Pennsylvania is the most important state in the union when it comes to the election. So you got to go with, if you're running for president, you got to just presume, hey, I got to block this thing. But that said, the people from Pittsburgh, I bet they would vote for it if they had a chance. Let's go to Adam in Georgia. Adam.
What's going on, Jim? How you doing, bud?
Good. I'm worried about the Eagles playing the Giants. You got to, lately I'm just afraid of being booed by the coach, to be honest.
Okay, well, it's all good, man. Hey, okay,
maybe.
check it out.
Maybe.
How do you think Home Depot's doing, Jim?
I think Home Depot is doing unbelievably well. Now, unfortunately, I think sometimes it's doing too well because those storms were so horrible. But Home Depot's always there helping on that. It sells at 27 times earnings. I don't think it really sells at that. I think it sells at a lower price earnings multiple. Why? Because I think the earnings are going to be sharply better than expected. And I'd like Ted Decker to come back on the show because he's a true gent. Let's go. He's a CEO. Let's go to Glenn in Georgia. Glenn.
Booyah, Jim. This is Glenn from Warner Robins, Georgia. Long-time watcher, first-time caller. Thanks for taking my call. You are one of my heroes.
Oh, thank you. I sure try. My team knows it's like, wow, it's Friday. This is only I think this is like our 17,000th show. All right, go ahead.
Hey, Jim, my question is on Intuitive Machines, ticker symbol LUNR. Stock has run up to $11 this year, earlier in the year, on its first lunar module launch, but it quickly pulled back to $5, and recently NASA's given them a $4.82 billion contract for 3 more lunar modules. Should be announcing the date for its next one soon. What do you think about the stock? I own a large
I'm of two minds of this. First, it's incredibly speculative, but second, if it involves space, it's a good spec because people just love it. It's like uranium and space are the two specs. LUNR, by the way, that's a NASDAQ company. Right? Can we have a 7 straight up week? I say, why not? As long as the strong earnings will continue, we will. I think the good times can keep rolling. Mad money tonight. We were off the charts a couple weeks ago on a large short position, 10-year Treasury note futures, and we can't stop thinking about why investors are shorting Treasuries. I'm thinking the situation. I think I've got the answer. That Netflix's quarter was anything but chill, with the stock soaring in today's session. I am sharing all the major line items you have to know from that report, and that was a fantastic conference call. Plus, we held our Investing Club monthly meeting this week, exclusive for CNBC's Investing Club members, of course. And we had so many amazing questions that we decided to answer more of them tonight. It will be like a snapshot of what you get if you belong to the club. I'm telling you, I'd match the club against Netflix any day of the week. You don't miss it. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.